PE ratio is 15.7 versus 56.9 for the industry. Price of sales 1.3 versus zero point 0.6. Price of book value 4.5 versus 3.3. Price of cash flow is 13 versus 11.4. And they have a very good PEG ratio, 1.8 versus 10.2 for the industry. Now, you got some nice growth here. The earnings growth for Leidos of the last year was 20.8%, and that's while the industry was down 34.2. Sales up by 3.1%, just slightly ahead of the industry growth of 2%. And the 5-year earnings per share growth estimate from the analyst is 8.1% for Leidos and only 6.2 for the industry. So Leidos looking pretty good so far. They do pay a 1% dividend, use about 14.4% of the earnings to pay that out. We do send the balance sheet. They got a current ratio of 1.7, just above the industry at 1.6, so good liquidity there. Debt to equity is 1.1. That's the same as the industry, so not a bad debt situation. Do notice about 50% intangible assets, which is above the industry at 38.9. And got to be careful with those because those could be written down and cause you things that rate downs you didn't expect to come up because they were overpriced. We do see a net profit margin of 8.4 versus 7.3. Return on equity very good, 29.5 versus 24. Free cash flow, $1.625 billion. Not as good as the industry at $5 billion, well, about $5.2 billion. So I'm a little bit disappointed there with Leidos on that one. Chase, what do you got?